The Dow fell by more than 1,100 points, 2.6% in yesterday's session. It was the 10th straight losing session for that index, the blue chip index. Join us now to take a look at market technicals. Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. We'll probably talk S&P, just that's more conventionally used by technicians to decide on what the market's going to do. So we had an exhaustion to some extent of selling yesterday that you point out. So maybe a little bit of a snapback is to be expected, but damage has been done, and it could be after a snapback we could head back into testing the recent support levels. How low are they?
This actually comes at a pretty interesting time seasonally, because we have usually that Santa Claus rally, which is the last 5 days of the year, first 2 days of the new year typically. So with a snapback, it's possible that it does last into year end and maybe slightly beyond that. But if we don't recover pretty dramatically between now and Friday's close, so just 2 days, we will see sell signals in our intermediate term metrics. And this will be for the first time in months that we've had this. So the weekly MACD indicator, for one, it's an intermediate term momentum gauge, is on a sell signal right now. So if we don't have a good recovery, not enough this morning, by the way, in the futures, we don't have enough.
It's not much.
What
would it take in the futures for you to say, okay, this is a strong enough bounce back that it could break through what happened yesterday?
I would say at least 50, but probably more points than that, and it's going to be tough. It's possible. We saw what the market did yesterday, down about 3% for the S&P 500. In terms of levels, on a day like yesterday, when you see the VIX spike, the levels won't matter very much intraday. So we watch them on a closing basis. And if we were to see the S&P 500 take out some support, the 200-day is about 6% below, and then that's not a major level for it. The more major support is really about 8 to 9% below. I would not rule out a correction of that magnitude in Q1. We don't think we'll see that level of sort of immediate downside follow through, which is a bit of a gift potentially from the market, so people have an opportunity to reduce exposure ahead of that.
When you sat down, though, you said, things are getting interesting. That's a very Confucian way of looking at things. Interesting.
Well, I'm a technical analyst. So a little volatility stirs things up. But in reality, when you see a sharp decline like yesterday, it's more likely a counter trend move. So as fast and furious as it feels, what would be worse for the market is if we were to see a slow grind lower, because that would likely be the start of something that was worse.
That's what you said.
Yeah, we were already seeing that slow grind. Is the VIX ever useful in any way as a predictive? And I think I'd just buy it and just hold on to it until something like this happens and then sell it.
I don't think the VIX is great as an investment or as a hedging tool necessarily, but it does give you insight into
only
market
in hindsight.
sentiment. Well, no, in real time.
Say, well, the VIX spiked. Now it's come back down.
Yeah,
it told us nothing, but didn't predict the spike.
The VIX spikes don't last very long, as you know. It's within a week or so that spike has sort of worked itself off.
I think we should get rid of it.
But if you lay the DeMark indicators over the VIX, it can be actually pretty informational.
Tell me about the 10-year, because you thought it was going under 4, I think.
We did, yeah. And listen, it's taken out the downtrend line drawn back to 2023. So that was our sort of year-long cyclical down move, which is now effectively reversing. So if we see them hold above around 436, that trend will be reversed, and it would suggest that the secular uptrend that we think is now in place has resumed. It's
to 5%?
More likely. 5% would be basically the first major resistance, 5 to about 5.25. That seems very realistic for next year, regardless of whether this is the actual breakout or not.
Where do you land on the Bitcoin?
The Bitcoin has, listen, positive momentum, intermediate term, long term, and we still believe that Bitcoin's right for a small percentage of portfolios. We think there's probably a better entry, so looking for more consolidation. As you know, it tends to stair step higher, and we think it's on a stair right now. But we do want to.
When you say there's a better entry, I mean there's a lower price point?
Probably a lower price point.
And what do you think is
consolidation.
What does the floor look like to you?
The support level, the high 70s is support in part, but it doesn't mean it has to go back there. Support doesn't act as a magnet, right? It's a potential area of buying pressure.
Somewhere I saw will it hit 1 million in 2020? It was either 2025 or 2026. I saw an article written. So that's where we are in terms of, I don't know whether...
I read that article last year. I read it year before that.
Well, it's on the way.
That.
Well, yeah, but it wasn't at 102,000 then. It was, but 1 million by next year. I think
that is aggressive. I mean,
or
think of
even
it as
2026.
It's exemplary of the risk appetite, though. Right now in the marketplace, it would be really hard to imagine an environment in which the S&P is pulling back 5 to 10%, and Bitcoin is completely immune to that. We did see a pullback yesterday, so it would make sense.
Did you bid on the